Okay, so good evening, everyone. Happy Thursday from wherever in the world you're calling in from. It's evening time here in the Caribbean, but our panel is indeed global. So, good morning, good afternoon, good evening. So very happy to have you all here with us. This is Founder Institute Caribbean's monthly public webinar. We endeavor to host at least one of these free value-filled events once a month, which is in addition to our weekly sessions that we host for our founders who are participating in our cohort. So thank you all again for joining us. First, I would love to introduce my team. Nike Schmidt is our program manager, and Adana John is our communications manager. And for those of you who may not know me, my name is Roll, and I lead the local chapter. Here with us this evening is a panel stretching across the globe. Christine Nadi from Egypt, Mollie Jahner from the US, but currently residing in Costa Rica, Emmanuel from Nigeria, Jeffrey, who's a son of the Caribbean soil, but currently in the UK, and Ugo, who is a son of the African soil, but currently residing in Jamaica. So I want to see some emoji hand claps for the panel. This evening is all about you. It's all about the audience. We will endeavor to keep the discussion not too structured. We want to truly open up the room to allow you to engage with our panel, with the panel, and ask all those pressing questions that you have as founders. So to get things started, I would like to first go around the room, allow each of our panelists to introduce themselves, their company, perhaps share a little bit about their investment thesis. And once we're through with that component, then we can truly dive into the meat of the session this evening. So Christine, we'll start with you.
Thank you, Raul, and I'm excited to be here today. I'm Christine. I'm based in Egypt. I'm currently serving as a venture partner with Level Up Ventures. It's a US-based fund, and we invest in tech startups in early stages, in pre-seed, seed, and early Series A. We write checks, something between 100K and $3 million in the startups that fit our investment thesis. And we have an appetite in investing in all industries, and we're currently engaged in several geographies, including the MENA region as well. And I'm excited to be here.
Thank you so very much, Christine. We're excited to have you, especially knowing that it's 1 a.m. for you. So truly appreciate you being here. Thank you again, Christine. Mollie, would you like to go next?
Sure, I love that. Yes, Christine, you're putting us all to shame. 1 a.m., my goodness. Mollie
Mm.
Jahner, I'm the principal at Mission Cultivate. It's a defense tech community. I'm a little bit different perspective than some of my esteemed colleagues here on the panel. I'm coming at it from a non-dilutive perspective. So while also being an angel investor, I'm very focused on helping companies connect to government funding in some capacity. And so I've been doing that for most of my career, primarily in the defense and national security space, really looking for companies who shore up supply chain, especially in contested environments. So that's kind of our main focus.
Thank you so much, Molly. We appreciate you being here. And as I recently shared on LinkedIn, founders often think that, VC is the only funding route. Molly is here this evening to show us that there's another avenue. It's non-dilutive through grant opportunities. So we welcome that perspective. Emmanuel?
Hello, I'm Emmanuel. I lead Next 12, and what we do, we are an accelerator over here in Africa where we bring in founders for in-house residency programs for 12 days intense programs. And after that, we invest in all founders that are part of our residency. And on the side, I'm part of a fund, and basically our investment thesis is particularly in Nigeria, the healthcare sector, and the pharmaceutical segment in the healthcare sector. So we invest in early stage through to seed series.
Thank you so much, Emmanuel. And by the way, what time is it in Nigeria now? I think it's around 11. You're 5 hours
Yeah,
ahead, right? Okay, all right.
Yeah,
So not too late, not too late, but still, it's late, and we appreciate you being here. Awesome, awesome. Ugo?
Hi, everyone. My name is Ugo Ikemba. I'm Nigerian, like Emmanuel, and just came back from Lagos. But my fund is headquartered in Jamaica, and we work with the Development Bank of Jamaica and several other investors to invest across the Caribbean. Our focus is early stage companies as well as greenfield experienced greenfield and early stage. We consider them the same. So we've invested in solar parks and different fintechs, and we're looking at the healthcare sector now with insurance, and so we're insurtech. So we are focused on just the Caribbean region, not outside of that, but we look for opportunities to partner with U.S. firms, African firms, Latin American firms, while keeping the juice sort of in the Caribbean. 200,000 to 2 million in ticket sizes, and primarily fintech, climate tech, and what we're calling a modular tech.
Thank you so much, Ugo, and I appreciate that you're squeezing out all the juice, and we need it here in the region, so we can't get enough. Jeff?
Oh, hi guys. My name is Jeffrey. I've got two hats on today actually. In the first one, I'm a managing partner of a venture capital fund in the UK. We do pre-seed and seed stage investments. So we write about checks of about the 250K mark. And then my other hat is as a managing partner of Caribbean Ventures, which is a new launch, a new fund that we just recently launched to back the best and brightest tech startups in the region. In both cases, we're looking at tech and tech-enabled companies. From the very first, we were first check funds from a pre-seed stage. And yeah, we're looking at companies that can actually scale not just within the region, but beyond region as well. So happy to meet all of you guys.
Wonderful. Thank you so much, Jeff. All right. So again, welcome, Christine, Molly, Emmanuel, Ugo, Jeff. Let's dive right into it. So how are we going to do this evening? You can drop your questions in the chat, raise your hand, feel free to come on camera, unmute. From a moderator standpoint, if you raise your hand, that's the easiest way for me to identify you. If you don't want to ask your question live, drop it in the chat, and either Adana or Nike will ask it on your behalf. So Adana, Nike, do we have any questions as yet in the chat? Okay, so who would like to kick things off? The room is full. There are 37 of us here. So just use the raise hand feature. If not, I will kick things off.
Actually, we just got a question
Okay.
from Terrell in the chat room.
All right, Terrell, would you like to unmute? Because I can see you.
Good evening, everybody.
Hi, Terrell.
Hi, how are you?
Where are you calling in from?
I'm calling in from St. Vincent and the Grenadines.
All right, welcome,
Yes.
welcome.
Good. All right, so Carapay is building payment infrastructure for SIDS, small developing islands in the Caribbean states. What advice would you give founders on positioning SIDS focused on fintech, so investors see a scalable and regional opportunity rather than a series of small individual markets? And what milestones would you expect before funding a company like ours?
Thank you so much, Terrell, for the
You're
question.
welcome.
So we'll follow the same format. Christine, I'll start with you and then go around the table. So Christine, did you get the entire question?
The sound was cutting off on my end.
Oh,
Okay.
Do you mind repeating the question
yeah,
again?
sure. Okay. So, what advice would you give founders on positioning a small island development state that's seeking investors in a fintech to show that it's scalable at a regional opportunity? And what milestones would you expect before funding a company like ours?
And I think we lost we lost Christine.
Oh,
I
All
can
right.
jump in real quick. I think I
Yeah.
was next, right? So,
Yeah.
I don't know that you necessarily have to show that you can scale. I have worked with quite a few investors who really enjoy the niche aspect of some things like that, that they can actually do very well. And I would say, don't don't focus on scaling at the expense of potentially diluting your message or diluting the impact of the specific area you're focused on, is what I would say. Then on the other side, traction, looking for investment. I think anytime I talk to customers or founders focused on finding that traction that investors need to see, it's usually rooted in customers or LOIs. And they don't necessarily have to be revenue generating either. It can just be people who have said, hey, I raised my hand, I want to do business with you when you launch this thing, and they put it on paper. And it can be non-binding, but showing that the market is ready to partner with you shows validation. And that's kind of the early measurement that some of us use on the defense tech side anyway.
Wonderful. Thank you, Mollie.
thank you.
Emmanuel, would you like to go next? I'm just
Yeah,
following
yeah,
the
yeah.
script. Yeah.
Sure. I do think like you shouldn't think about it in the sense of what do I need to do to get certain investors to show interest in me? Think about it in which investor aligns with what I'm trying to do. Because most VCs already know what they are looking for. They already know the sector they're trying to invest in. They know what kind of companies they're looking for. They basically know every single detail that they need to know. So try to find investors that you align with. That's why most times when I tell founders, when you're trying to build an idea and trying to build a business model, it's good to look at, if you're trying to, if you have a plan in the future to raise VC, it's good to look at, the active VCs in the region, look at their investment thesis, look at their model and see which one aligns with what you're trying to build and plan ahead for it. So that's what I'll say.
Thank you for that.
Thank you, Emmanuel. Jeff, any thoughts to add?
Slightly different tact, I guess. I really like the fact that you've spoken about um, milestones. I think is really important. Um, when we're looking at companies and we write first checks, so it's probably more relevant. Um, we want to see a differentiation between someone who's focused on building a product and someone who's focused on building a business. And I think when you start talking in milestones, it feels to me like you start talking about how does this business scale, and that's how I interpret the question anyway. And I think that's really good and really important. What we would want to see is almost working backwards, depending on where you want to end up. How do you get there in a series of logical jumps? If you want to raise, and I'll give you a good example. If you want to raise, I don't know, $5 million of funding, what does a investor who's investing and writing $5 million checks, what are they looking for? What does your business need to look like in terms of revenue, in terms of, customer base? And then you work backwards to figure, okay, well, how do I get there from where I am now? And that might take two or three jumps. So it's actually mapping out your maybe fundraising, but definitely your financial journey, and how you get there. And of course, the first step is with the first investor. And like Molly said, it can start with something as simple as having LOIs, and getting that first investor in on the back of LOIs, and then executing on that plan, getting to the next step when you're actually generating revenue, and you go to the next stage of investment and says, right, look, I'm generating revenue now. I need to scale, and you have to know what they're looking for. And I think that's setting it out. And the only way to really do that, I think, is to start talking to a lot of investors. It's kind of like Emmanuel said, you've got to know which investors you've got to do research and know which investors you want to talk to. But you have to talk to even the ones that you're not ready for, because no, the way you win is in knowing what that third round investor is looking for, so you can actually work backwards and plan it out. And I don't think, well, I haven't experienced uh, a founder asking an investor at as much later stage, and then what do you need to see? I've not heard an investor come back and say, and not talk to them or not give them an answer. So I think that's the approach I would take.
Thank you.
Thank you,
You're
Jeff.
welcome.
Ugo, any additional perspectives? You're on mute, Ugo. You're on mute. Still on mute. That iPhone is acting
There
up.
we go. I
There
said,
we
how
go.
did that happen? I'm sorry. Yep.
That's okay.
So this is a great question to me, because we just finished a fintech transaction, and one of the things that we went through that I think is very critical. Well, I could say three things. One, I would say integrity of the the founder is quite important to us. So they're telling us the truth, and when you start to dig deep, because you're trying to do this investment and you want somebody who's telling you the truth about the milestones that they have actually gone through, as opposed to not telling you the truth. And the other one is a sense of the valuation based on where they are, what they've done, and something that matches what we think based on what they've done. And I think there's one thing that came quite clear to us in this last transaction was, have you actually gotten somebody to buy your product? You could be losing money, as somebody I think previously said. But is someone interested in this new technology or this new fintech proposition that you're laying out? Because right now, literally all the money is going to AI in the US, like 80-90% of it. So in the Caribbean, you've got, in emerging markets, you've got these early stage companies that are not seeing a lot of capital flowing this way. So investors, I mean, especially like me, we're like very careful where the money goes. So we really want to see, has somebody paid for your product that you've got, not that you've made a lot of money or you made any money, but has someone shown really strong interest? And then do you have partners in the process of trying to get your product out into the market? And I want to be careful not to give away this particular one, but so there's a couple of different milestones. I would say what I look for mostly is passion, that you really want to do something, integrity, that you want to do something, and just some sense of that this product is actually, it's not just a pipe dream, that there's a realistic part of this product that could take off. I want to be able to see that it really is going to do well in the next 2 to 3 years, and that you've put all the things in place. So I don't really look at discounted cash flow analysis. I mean, we do it, but for an early stage fintech, it really doesn't matter. It's a guess, right? So what you have to rely on is, what are those things that this person has done, or this individual or team? I prefer to see a team, by the way, rather than an individual.
A person.
A person. What have they done that shows that they're plugging up all the holes on the way for this product to take off? Yeah.
Okay.
Thank you.
Thank you, everyone, for your contribution. I appreciate it.
Thank you, Terrell. We lost Christine, so I guess if she comes back in and she has some additional feedback for you, we'll allow her to share that. All right, I'm not seeing any raised hands, so I don't know who to call on next. Do we have any other questions in the chat? Okay, I see Luke's Health Limited. If you can unmute, introduce yourself, ask your question. Luke's Health Limited.
Hi, good day. Hi, you hearing me?
Yes, we are hearing you.
Hi. So my name is Dr. Luchan. Sorry, I cannot show myself right now.
No problem.
But my name is Dr. Luchan. I run a bespoke home healthcare company here in Trinidad and Tobago. And what is the question I want to ask? I want to ask, I know it was touched on, but how do you really find investors that you are really in line with? And when the investor does write that check, and the relationship starts to go on, what what is there in place to ensure that you can retain your vision for your startup? I know as time goes by, from my experience, that things have to be tweaked, things have to be improved. However, retaining the core vision of your product, service, whatever it may be, how do you really find that? Because that is my concern as to why I have not even entertained um, discussions with investors, and people are interested, but it's just, one of the things that I'm just like, oh my gosh, how do I do this without losing the vision of where I know this company could be?
All right. Thank you so much for the question. Molly, would you like to kick things off?
I would. So this is why I love non-dilutive for what it's worth, because you don't have to give up any VC or cap table. Two things. I don't want to hog the spotlight from all the other amazing panelists. Your cap table is your most important bargaining chip, especially pre-seed. And so I see oftentimes founders give it away like it's candy. And then when a really serious investor comes along farther down the chain, the table's a mess, and they're like, I don't want to get involved in this. What is this? And so you're not wrong in that feeling of being very cautious and very careful. However, I will also say this: the right investor is a partner. It's not a vending machine of cash. It is fuel to make you go faster because they believe in you, they believe in the vision, and they have a way to help you achieve that vision. And so it should line up exactly with how you feel about it. And if it doesn't, then it's not the right investor from the very beginning. Of course, there's going to be things that you run into, just like you would with a co-founder, and conflict resolution and things like that are important. But at the very core, they should be 100% aligned with where you want to go with the product. So that's what I would say.
Thank you, Molly. Jeff?
Hi.
I saw you smiling from before, so I know.
Yeah. I where do I start? I agree to a large extent with what Molly's saying. I don't like the term giving up shares, because you're not really giving up shares. You're selling a portion of your business for future growth. And you should look at it like that. But I guess the point to you really is, what I'm hearing is more about control, and control of the vision in this particular case. And to Molly's point, this really is about finding the right investor, and it's almost as hard, if not as harder, than finding a co-founder, or probably even a spouse. Who knows? It's really hard work. It takes a lot of time, and you have to make sure you get it right. Um, and actually, if you look at it this way, if you have a really good investor on your side, that's a tool that you should be using. You should be going to them. You should be able to pick up a call, pick up the phone, and speak to them and get some feedback and advice, and not necessarily have to wait for a board meeting or anything really structured. And that's kind of how it should be. But the point I want to make is, if you have a really good investor on your side, they will actually help you shape that vision, and actually probably will help you see that in a way that you probably wasn't thinking of before. So I think that you need to have a little bit of an open mind when you're going into these types of relationships, because either way, in any relationship, in any partnership, you've got to be open to be challenged on your vision and that direction. But if you feel really, really strong, if you have a really high conviction about that vision, it might be that it's something you have to do alone. I think a lot of investors or the right investors should bring experience, um, of having got, trodden that path before, and should be bringing value to you. So, yes, you absolutely need to find the right investor, but once you find the right investor, you have to be open to be getting as much value out of them as possible.
Appreciate
That's
those
my thoughts.
insights, Jeff. It would seem as if we lost two of the panelists. So Ugo. would you like to share any additional perspectives or? And Ugo looks frozen as well.
Let me just jump in a bit.
Okay, Emmanuel, I lost you there. Let me add you back to the spotlight. I think when your camera turned off,
Yeah.
yeah. Go ahead, Emmanuel.
So a great one. I do believe that a lot of founders have had a lot of LinkedIn stories and have lots of fears about raising from, investors and all that. But highly is because of the lack of information regarding how the VC space works. And what I would advise most founders is you should look at how VC, firms and funds are structured. You know, most times it's either you're pitching at the wrong time to the right investor or you're just pitching to the wrong investor, right? Motivations for different VCs. So I could be a VC investing in fintech, but I might have like a structure where, there are two structures, right? The European and American structure. So I might have a structure where, I'm like, for example, you're looking for a VC that really will be a partner, will have skin in the game, will want to work with you. Now, a VC that has an American structure might not necessarily fit that most times because they are like deal per deal basis. They must have existed a few two companies and they are not really as motivated to engage with founders compared to someone that is waiting for, his whole fund before he gets his carry. So what I advise most founders is, do your due diligence on how VC works. I love working with founders that understand the whole VC space itself. And then when you're pitching to a VC, you know what sector they're investing in, what stage they're investing in, how the firm itself is being run. Then you'll be much more prepared when talking to VC, right? You wouldn't be scared of, oh, what investment should I take? How can I get, better shares? Because they are not out there to be wicked. They're just like working based on the terms they also have. So once you understand the terms they are working with, you can better work on your alignment with them.
Wonderful. Thank you, Emmanuel.
Okay.
Ugo, I know you
Yeah.
probably missed a lot of that
Yeah.
conversation,
Sorry about that. Somehow I got kicked out. So it's Emmanuel, I was going to say some investors actually are wicked. So you have to, the founder really needs to say, do I want to work with this person? I've actually also walked away from some founders when I realized they had no interest in being partners. They just wanted to get the money and then they wanted you to stay out of their way. So one of the things I look for the most is teachable. Uh, um, everyone
coachable.
needs to coachable. Everyone needs to be even me. You the investor. You want to learn from them. They want to learn from you. Your partners. You're going to try to crack this beast together, right? This journey. You're walking hand in hand. So I would really be interviewing the investors. And I think then what most of us investors are looking for is can I work with this person for the next 3, 4, 5 years? And then the money is great if you find somebody who's willing to continue to support you. A lot of times you have to keep building value. I don't know if this is the last point I'm going to make is think from the mode of when I meet an investor, they're about to give away or they're about to invest hard-earned cash, which they can lose. So how do I continue to have milestones where I increase the value of the company so that the investor not only gives me the first seed or the first initial investment, but is willing to do follow-ons with me all along the way? That's all. That's what I've got.
Thank you, Ugo. I appreciate that. Luke's health, I hope that answers your concerns. John, would you like to unmute and go next? I see a few hands up. So, John, you're next.
Thank you. Appreciate it, Raul. My question's mostly for Molly, I think, but I would also love the input of the other panelists who might have more specific info for like regionally in the Caribbean. We've been working on sargassum for the last 7 years and making some really good progress, but we've found it very hard to find non-dilutive capital from Mexico and the Caribbean, for a variety of reasons. But I would just love to hear kind of how you would approach looking for that type of capital, and what are the just some general advice, because it's been really difficult with the corruption and with a lot of projects being snake oil, and how do you navigate that?
Yeah,
General
that's a
question.
great question. So I would say two things. One, you can still find non-dilutive capital in the United States, even though you are outside of the United States. And oftentimes there are programs meant exactly for that. So don't discount that just because you're not currently building there. Especially between there's a corridor between Latin America and the United States right now, Mexico in particular. Like there's a lot of tech being funded jointly through non-dilutive. And then the other thing I would say is look at banks. There are oftentimes a ton of opportunities with the different world banks that are around, investment banks who have either low interest loans, or they have smaller grants, or they have specific things that they want to try and fund. And the way that I would approach it is twofold. I would look for yourself, obviously, like go and see what they have available. There might be just funds that no one's taking advantage of. I know Raul and I have talked about this in the past. Like there's just pots of money and they can't give it away because there's no entrepreneurs applying for it at some of these banks. The other opportunity, and I would encourage you to do this, is to find a partner. In the States, they call them prime, so like prime sub relationships. Find a company that's already really well established that could potentially take advantage of those funds faster from those banks, and you bring something to their offering that makes it sharper. Whatever you're building, there's going to be partners in that ecosystem, and that serves two purposes. I would say this for everybody building. One, if you're going on after non-dilutive, find a partner that has past performance history, somebody who could potentially take on that money faster. And even if you don't win that non-dilutive, now you have a partner that you can go after revenue with, and opens up all kinds of different distribution channels. So that's probably how I would start. And then lastly, if you have time on your hands, which I doubt you do because you're a founder, so there's like no time, I would just start to network with founders who have already been funded or been working in the area for quite a while, and not just tech founders either, established businesses that have been in the community for a while, because they likely will know where like the hidden pockets of capital are, particularly grants or government money, but also businesses. So corporations give out grants and non-dilutive too, which is something a lot of folks don't realize. So thinking about like FedEx, for example, which is worldwide, but in the States is my go-to example. They have a $25,000 business grant that they award to many businesses every year. And that can sometimes be the bridge loan you need to like get to the next tranche of whatever development you're focused on. So I hope that answers the question.
Yeah, really quick follow-up, if I may. We've actually done a lot of the grant applications and even won some, but we find that by the time they actually deploy the capital, like that
Yeah.
priority is already gone. So like we applied to an IDB
Priority, you mean
grant,
like your
we have some,
priority in your company, like for the product?
like the grant process is very relatively arduous. There's a lot of paperwork. You've got to fill out a lot of forms, have a lot of like SDG goals that you check off, and specific things you're trying to measure with the project.
Mm-hmm.
And by the time they deploy the capital, that project might not even be a priority anymore. It takes like 2 years sometimes for these DFI banks to deploy capital.
Mm-hmm. Yes, I mean my main experience is obviously in the States, and they deploy pretty quickly. And it also depends on the office and the bank. So I think the fact that you've already won is huge. That's massive. So I mean, I would love to. I mean, we can talk offline too. I don't want to take the whole room by any means, but if you're already winning grants and you have something really compelling, so there's going to be ways to deploy that capital faster. You just oftentimes have to find the right stakeholder to move. So I'll give an example. I'm sorry, Raul, cut me off if this is too much for the room. I'll give an example. I work with a company that's building a small micronuclear reactor. They need funding immediately. It's very CapEx intensive. What they do is they actually went to the stakeholder of the agency. There was a small grant. It was maybe $1 million grant. And they're like, yeah, this is great, but that's not even going to scrape the costs, like barely scrape the surface of the costs that we need. You went to the stakeholder, and within 3 months, because they really wanted that tech, they had arranged for more budget to be moved in, and they created a solicitation for them. So if you are winning awards, somebody wants what you have. I would go to that person and I would talk to them, be like, how do we make this go faster? And how do we make it be more efficient and effective? So that would be what I would say.
Thank you.
Yeah.
Thank you, John, for the question. Thank you, Mollie. To our other panelists, any other
If
perspectives to
possible,
add? Yeah, of course, Ugo. Go
I'd
ahead.
like to talk to John. I mean, I looked at another sargassum opportunity in the Caribbean. and it's quite an interesting area for us. We're more climate focused, and we had actually, but it was from the European side. So, are you coming from the U.S.?
We're a U.S. Delaware C Corp, but we're based in Mexico, Quintana Roo.
Okay, maybe again offline because I've been very interested in the Sargassum area, and we did find some funding from Europe. I mean, like we found up to $1 million in Europe that was funding that you could get at 1%, not necessarily non-dilutive, I guess, but it was at 1%. And but we couldn't partner with the folks that we were talking to. I think they thought they had found a gold mine, and it wasn't. It couldn't be a partnership. So it would be interesting to talk to somebody else in that area and just get a sense. So, Raw, you can share my
Yeah, I mean,
details with them. Yeah.
I'm just smiling ear to ear, right? Because this has already gone beyond just an AMA. Now we're actually helping John close deals. I love it, Molly and
Yeah.
Ugo. So good, great stuff, great stuff.
Yeah.
All right. Thank you, Ugo. Thank you, John. Adi, I see your hand is up. You wanna go next? Adi Dwayne, could just unmute.
Okay, hi, Ron.
Hi.
Actually, it's not Addie, you know me, it's Judith,
Okay. Well.
Dr. Molly.
Okay. All right. Okay. Well, I'm going by the name on your
Yeah,
your
so it came
profile.
out that way. So just for introduction for everyone, very interesting conversation, and I didn't know how long this is going on till, so I said I was waiting till the end, but just in case I may have to leave. So just for introduction, I want to commend Roll for what he's doing. I mean, many years ago, maybe 15, maybe more like 15 to 20 years ago, I led a major initiative to start a private equity venture capital initiative throughout the region. And I'm really hopeful that this time around we can get it right. What happened at that time, I'm saying this for the context of those who are now attempting to develop the fund here. I would say 3 areas, if I may just touch on them. One has to be education. I heard somebody raise the issue of founders not understanding what private equity VC is about, and therefore they expect they would do it their way when really it's a partnership, and therefore the relationship has to be right because there must be win-win for both parties. And I think that isn't something that, again, you still have to instill in many founders coming to the table, because I think it's Hugo who made the point that some founders could be bad or evil, but also some investors can be. So it's on both sides. Those who just want the cash because they feel it's a way to get money that they couldn't get from the traditional source, and then you have it on the other side. So one of the things you have to look at is the whole education aspect of the groups, and we did it in those days, but I think we need to do it again, Rod, which is all groups need to be educated. The founders, the investors, and we call it the intermediaries, so that if you go to the bank, some projects will have to be syndicated between debt and some equity, etc., as opposed to no funding at all. Briefly, I just said the other issue has to do with valuation. Somebody made that point again. In this market, you have the challenge with respect to how to value the companies so as to know, how much you're going to be entitled to. We have challenges with respect to valuation. And those of you in the VC market, private equity, know there is that correlation between valuation and exit. Yeah? Because valuation can inform how long you're going to be there and how you're going to exit and the terms of exit. So that's another area in terms of education and information. The other thing, and I think, I don't know if it's Hugo, if I just remember Hugo name, the issue of demand. You can have projects, but we always say demand and real demand. There could be demand, but if you don't meet the criteria or have the necessary management team, the necessary focus, the necessary systems, then that demand is not real demand. And therefore, what you're going to have a lot of deals coming forward and not being able to finance them. And that is something you have to look at, because for the 8 or 9 years that I was in charge of the initiative before I left, we had this issue of mobilizing funds, but the funds not flowing to the right projects, so that it became an issue of demand, what is real demand, and then how the supply how you structure the funds so that so again, I'm hopeful, and I expect that the market has changed a bit in terms of technology and so on. But basically, there are a number of areas that you need to address as you go forward. And it'd be nice if we have these sessions, maybe, I don't know, more frequently touching on some of these issues and to see how, collectively we can see this moving forward. Because while this initiative that I speak about is no longer in place, I thought it was a bit too quick to say, well, we're not getting the return in the deals, as opposed to the staying power to develop the necessary ecosystem so that you can have, funds flow in private equity. Because it's not just about private equity. You have to develop your whole financial landscape, even though you're looking at developing a PE VC market. It's about access to funding across the continuum in a market. And again, the education system for all levels. So
Wonderful.
that's it, I would say, for now.
Thank you. Thank you so much for your commentary, for your observations. And even though there wasn't a question in there, I'll still open it up to the panel in case there's some additional feedback. I thought maybe we could perhaps touch on valuation, especially from, with pre-seeds where we're not really doing valuations. It's a safe. So maybe Jeff, you wanna touch on.
Roy, before you continue, actually the question could be the duration of some of these funds, because what time frame they're looking for. Because one of the things, if the exit period, it's not like, the stocks are going to go like the dot-com era and whatever, and after 2 years, 3 years, you're going to see the significant returns. So it would be interesting to hear as a question, what is the time frame they're looking for, and if they could shed some light on their exit strategy.
Very good question. Thank you. So, sorry, Jeff, I'll actually start with you on that one.
Yeah, sure, no problem. Well, thank you very much for that. That was actually quite enlightening, and I would actually like to probably jump on a call and have a more detailed conversation with you at some point in time. So just two things: evaluations and actually the investment horizon in terms of what's the expectation from the investors. For us, at a pre-seed level, for both the UK fund and the Caribbean fund that we're launching, is the same approach we have. And yes, there's safe and there's an opportunity to defer or to delay that conversation. But I think it's really important to try and get that locked in early on. Valuation is a result of an equation, as far as I'm concerned. And that equation is how much money does this business need, and what percentage of equity matches the risk profile that business presents. And that's how I look at it, and that's how we look at it. If there's a clear and convincing pathway to funding and to revenue, then obviously there's a lot less equity that needs to be had for that risk profile. If it's very concept, if it's a concept and it's going to cost a lot of money to scale, so cap intensive, then that's quite a different scenario. So for me, as a VC, the first thing I look at is the risk profile, and I look at, okay, how much equity do I need to get to negate that? And you can have a risk profile that's very similar, two companies with very similar risk profiles, and therefore you're looking for the same amount of equity, but they need slightly different amounts of funding, and therefore the valuations are very different for those two companies. Or you can have, more companies coming in, and then it's not a straightforward equation. If you've got two investors writing similar checks, both investors won't get, you're not going to double the amount of equity each investor gets. There's a relationship in which that gets reduced somewhat. So that's the valuation perspective. In terms of the investment time frame, most VC investors and not so much PE, but most VC investors acknowledge and accept the fact that this is a long-term investment. Writing a check at pre-seed, the first thing you have to understand is, well, what is the exit strategy? How am I getting this money back? I think that there's a false economy that things will go the way that it typically goes in the US, where you try to get us all the way to IPO. My approach and our approach for the Caribbean fund is very similar to the approach that we take in the UK, which is a little bit more conservative than the Americans and the American model, which is We want to see an exit strategy, particularly through a trade sale. So we would want to see this business grow to a point where it is an attractive acquisition for another company, either for its revenue, its customers, or some strategic advantage that it presents to that company. So if it's for a trade sale, then I'm looking at 5+ years that I'm going to be in this for in terms of an investment time frame. Of course, there's an opportunity if it's scaling much quicker and is going through several rounds of funding, that there may be an opportunity to exit typically on a Series B round. Then you may be exiting slightly earlier because typically what we find in the UK is that at the Series B round, there's an opportunity to clean up the cap table, and early investors have an opportunity to come out. So based on those two strategies that we typically use for pre-seed funding and then seed stage funding, you would typically find anywhere between 3 to 7 years within the whole period for our investments.
Thanks, Jeff. Before we move on to the other question, Emmanuel, Ugo, or Mollie, any additional input?
This is a pretty fantastic answer, Jeff. I don't know that there's much I could add to that.
Can't do much more.
All right.
The other thing I could add on valuation is a lot of times, if you're not the first investor tends to put a value on the company. And then as they start to increase, they do more things, they get some sales, and then it starts to add more value to the company. So one of the comments I've heard recently is, I don't want to have a down round, right? Or a negotiating strategy from a founder was, oh, I've got this other person that's going to put, X hundreds of thousands of millions for this valuation that's much higher than the first valuation that they got. And it's all, sort of game playing and all that. I think that founders in the Caribbean, what I've known, not just Caribbean, a lot of emerging markets, is once they get people who are interested, they overvalue their company. And so then the discussion becomes more difficult to where you have to walk away from it. But a lot of times I like an easy discussion where we sort of agree that this is what the company is valued. I'm not trying to reduce your value, but I want you to have a realistic valuation of your company. Stop dreaming about billions when last year you only made $50,000, right? But you value your company at 20 million already. So it's some sort of gradual process, but there's a lot of dreamers out there.
Can I come back in on that as well? That's a great point. The other thing you need to be aware of and be cognizant of is the fact that there's a real distinction between angel investors and VC investors. And one of the problems that we have here in the UK is angel investors are less concerned about valuations. Is more, a lot of times is more of a, or partly an emotional play. So the price is less of an issue. Of course, with VCs, the price is the major issue because we've got a duty to return value to our investors. So you can have a scenario where the angels come in at a price that is too high, and actually it prevents you from getting further investments from VCs. And actually, the same thing can apply to VCs as well. If we get too excited, or there's some cases where some VCs, not us, have to deploy and they get desperate. They can start writing checks at some ridiculous valuations as well. The problem with that is that the next round of funding, where you have a more sensible investor coming in, will look at it and say, well, there's no way I'm paying that. And that's where you end up with the down rounds that the Ugo is talking about. So it can go both ways, is the point I'm making.
All right, awesome. So we're approaching the top of the hour, and we have another full hour ahead, but we have I see like 4 raised hands. So I think what we would like to do then going forward is to the founders asking questions, frame your question as succinctly as possible, like a minute or so. And for our panelists, if you could just touch on it 2 to 3 minutes, so that way we could try to work through everyone who has their hands up in the next hour. Dr. Thomas, you got the floor. Unmute.
All right. Hi, guys. I'm Dr. Mara Thomas, a dermatologist, founder of Absolut Skin. So we're building an AI-powered enterprise infrastructure that allows primary care physicians and healthcare associations um, to deliver specialist care by using our AI technology and teledermatology with our connected network of dermatologists that also connects the primary care providers to the users via mobile app that allows for assessment, treatment, and long-term follow-up. We're currently trying to raise our pre-seed round to accelerate the enterprise development as well as Caribbean growth and pilot deployments. My question is, when you decide to take a first meeting with a pre-seed healthcare AI company, what are two or three of the milestones or signals that would make you say, this company is worth our time? Let's get a meeting with this guy.
Wonderful. Thank you, Dr. Thomas, for the question. Emmanuel, would you like to kick things off?
Yeah, well, I do have like, a sweet spot I usually say for founders that I would love to get into, put in some money. So if it's a new market, if it's an emerging tech, and if it's also like you're having like a game-changing business model, the sweet spot is in the middle there where those three, intersect, right? So a new market, a game-changing tech you're trying to build, and also you have like a game-changing business model. It creates some sort of sweet spot where it gives you all the requirements to build a really successful company. But as I said, and as Adi came in and also said, alignment is really crucial, right? So yeah.
Thank you, Emmanuel. Mollie, anything to add?
I mean, no, I think that was a really, really well said answer. Alignment is going to be everything.
Jeff? You're on mute.
Yeah, I was on mute. Yeah. No, again, well covered. Not much to answer. Yeah, pretty well covered.
All right. Ugo?
Yeah, so the question was, what's the spark, right, for you to look at an investee? Was that the
Yeah, and
question?
by the way, Dr. Thomas is in Jamaica, Ugo. So
Is he?
yeah.
So
Next,
what
that's a
milestone?
trick question then.
Yeah.
No, I think it's been said, alignment and total TAM. We look at addressable market, like is the market that your product is going to cater to, is it large enough? That typically gets my attention. And then, of course, the alignment is a given. In other words, is it in sectors that we've determined that we're going to invest in? And then, obviously, the promoter, again, is background of the promoter. And Jamaica is a very small place, so everybody literally knows everybody. So you can get a sense of the people you're working with. So those will be the thing.
Oh, okay. But from your standpoint of alignment, I know you said you're interested in fintech and you also mentioned health tech, Ugo, in terms of what you're looking to invest in right now. So I'm in a health tech company, right? We have started to generate revenue. We have a workable model. So what I'd like to understand is, what's stopping me now from having a meeting with you? What do you need to tick off in a company that is aligned with your prospectus? What do
Loving
you
the
want to tell me?
directness of that
Okay,
question.
I want to sit down with
Ugo, he's
you.
putting you on the spot, man. He's putting you on the spot.
I'm looking for deals, right? I am a deals obsessed person, so I like to see great deals. So I will give you my number, or you get my number from the guys here, and let's connect tomorrow, if possible. The number one thing is, if I would say, like I said it already, Pam, is the product that you're giving, is it too niche a market? If it's only Jamaica, for example, zero interest. And I'm in Jamaica. If it's Caribbean, then how are you going to go to the different Caribbean? Do you have a real strategy, or it's just after we get done here, we're going to go to the Caribbean? So I'm looking for companies that either already have a footprint in the other Caribbean countries, right? Or they have a product that I can clearly see how they will jump from country to country, because the Caribbean countries are very small in population. So now if the product is viral and it can go global and all that, we'd like to see that. But that total addressable market is very, very key.
All right, wonderful. Thank you. So Dr. Thomas Adano would have dropped Ugo's LinkedIn in the chat. So feel
Sure.
free to connect with him on LinkedIn. And then
Just to give you a number for TAM, by the way, 10 billion plus 100 million, 10 billion, those are like the kinds of kind of numbers that you're going to do for a VC. For a PE, it's very different structure.
Agreed. All right, looking forward to connect with you. Thank you.
wonderful.
Sure.
Thank you, Dr. Thomas. Thank you. All right, Bryan, you're up next, buddy.
Awesome, thank you. So hello everyone, I'm Bryan, I'm from Costa Rica, nice to meet you all. I'm building an ecosystem of eco-stays, farming and livestock that works on a loop of self-sustainability and energy and educational experiences. Like the customer can stay with us, work at the co-working area, craft an avocado from the farm next door for breakfast, and learn how to milk a cow. And if they like it, they can invest in us and get shares as well. So not only having a vacation that ends at the airport, but becoming a piece of Costa Rica's sustainable future. And it's sustained among the ecosystem, like the manure generate gas for the hotel, as well as the solar panels, and the organic waste becomes fertilizer, and actually it's helping the environment. So the thing is, I have the first 5,000 square meters land for it, and I'm looking for investors or loaners or partners to build the infrastructure, because once it's built, the tourism and farming products will bring the revenue. And for Costa Rica, those are the biggest sources of income right now, and it has been like for the entire history. So also Costa Rica has like a nomad visa, so tourists can come and work here for up to 2 years without paying taxes. So the question is how to convince someone who might ask for sales or revenue or ROI, like all the good numbers validating the success of the business when you need the capital to raise and start making the profits. Thank you.
Mollie, only because you're in Costa
Sure.
Rica.
I'm in Costa Rica. Where are you, Bryan? I'm
Oh,
out in Guanacaste.
nice. Actually, this is for Guanacaste.
Is it? Where are you? We'll have to meet up
Yeah.
in person. That would
There
be
we
so
go.
Nice.
Another deal being made. I
I
love
love
this.
it.
I
No,
love
and
this.
actually, I'm very passionate about what you're talking about. So, despite my defense tech roots, I am a farmer and gardener at heart, and I'm very passionate about feeding people. So, I think to answer your question specifically, we should definitely talk offline, but specifically to your question about how do I go to market when the opportunity is there, but I don't have the revenue yet? How do I convince
Yes.
people? It's the story. It's tale as old as time. This is what founders have been doing for many, many years. And so you have to get people excited about you. I got excited listening to you.
Nice.
Like, but seriously, like what it is investors and partners and business owners, they invest in the founder. They invest in the founder and they invest in the vision. That's what they invest
Right.
in. And so if you can sell that, then you're going to get the right people to come alongside you and build out with you. I will also say, having really good numbers and a good numbers person, or maybe that's you, like where you build out, like, this is how much I need. This is how much capital I need for this first milestone. Here's what I need for this next
Right.
inflection point. Here's what this looks like. And here's when we hit revenue, cash flow, we're positive. Then that helps obviously ease some of that burden. But selling people on yourself and your vision is really important. And I will also say, I am also that tourist that stayed. I am in the
Nice.
residency process though, so I will be paying taxes shortly. But I think I am your demographic. So how do you convince someone like
Totally.
me to invest in what you're talking about? So we should definitely meet up in person and we can talk about it.
Love it. Yeah. I
Love
will
it.
send you a message on LinkedIn if
That's
that's okay.
perfect.
Awesome.
Any of our other panelists would like to add anything to that perspective? If not, we'll move on to the next question. Jeffrey, I saw that you were gonna unmute.
Yeah,
Okay.
no, I was just gonna say, look, it's again, I'm saying it again, well covered. It is a classic chicken and egg, but I think so well covered by Molly in terms of you've got to sell yourself and sell a vision and get people to come on. And it's not just investors as well, your co-founders as well. You know, selecting the right people around you. You've got to get them to buy into you and what you're trying to do.
Awesome.
Awesome. Thank you.
All right. Tevin, you're up next if you'd like to unmute.
Hey, good afternoon, everyone. Firstly, I just kind of want to start by saying, you guys have given me so much valuable information so far within this conference that I really do appreciate everyone taking the time to just kind of jump in and give their expertise and knowledge. My name is Tevin Cole. I am the founder of Vision Software Solutions, which is a technology enablement firm based in Trinidad and Tobago. Currently, we are focused on building digital or Caribbean entrepreneurs and business implementation with the right digital tools to better capture their markets. And we are currently going down the road of e-commerce here within the Caribbean and regional context. So the question that I kind of have, I want to ask is firstly, I'm kind of starting off as a solo founder. I'm also pretty young. I might not sound it, but very young in that aspect. I just kind of want to find out, what should I actually be preparing now to make a regional e-commerce play appealing to investors who help to place capital here? Is it proof in one marketplace or a clear replication plan? So you want to see a multi-market traction before you want to engage. And I know I've not seen him right now, but Dr. Ugo would have actually made, he'd have touched on it a little bit when he was speaking about in the Jamaican context, at least for what he may be looking for in that perspective. But I just kind of want to ask more generally, what does that appeal look like to have investors come and implement within the region?
I'll open up the floor to any one of the panelists who'd like to go first. No one? No takers?
Can you clarify the question maybe for everyone? Just like
What everyone would use.
Okay.
All right. So Tevin is launching an e-commerce platform in the Caribbean. And he would like to know what investors would like to see first or as a priority in terms of a proof of concept. Did I summarize that okay, Tevin?
Yeah, that was actually pretty great, actually.
Can I just probably just jump in?
Sure.
I guess, Tevin, what I haven't understood from what you said so far, and maybe that's the way to frame this, is what exactly is the problem you're trying to solve, and how unique is your solution compared to everybody else around you? Once you land on those two things, with a great deal or sufficient deal of clarity, then you get investors on board. You get them to understand it. So maybe the first thing is to have a think about, that sort of what is really specific and unique that you're doing. And then an investor could probably even just see from that how that can expand across the country and the region. So maybe start with those two, I would have thought.
I could add, is it Tevin?
Yes, Tevin.
Tevin. I could add also that identify the type of investors you want to talk to. I think sometimes when you're looking for funding, it's nice to in your head identify the type of investor you want. Yeah, i.e., what sectors do they invest in? Because some investors may be tech investors, but they don't necessarily invest in e-commerce platforms, for example. Maybe they do fintech or they do other things. So I find that it gives you a center once you and then you can pivot around that center. Even when we came to raise a fund for the Caribbean, we had identified who the investors for our fund would be, at least the first couple of investors. Then we started pivoting around that to onboard. So a lot of times when you're setting up a private equity fund, for example, you find the anchor investor, and then you go find investors that are similar. A lot of times it helps to have someone who comes in at the beginning. So rather than the other way around. You as a founder can decide, I've looked at these VCs and PEs in the region, and I'm going to target this one or two. And as you start talking to them, you start learning things you should pivot from, and then you eventually you'll find the right type of investor partner.
Thank you for that, Ugo. Emmanuel or Molly, any
I
additional
mean,
perspectives?
I was going to be a little spicy and say, do you even need investment at all? If you're building an e-commerce platform and you're coding it, or you have like yourself, or even using like Lovable or something like that to get started, to get to proof of concept or an MVP, like, do you even need initial seed investment? Why don't you start driving some revenue and get some initial customers to pay you, like pilot project? Just throwing that out there as a thought.
Tevin, I would love to hear your comeback to that comment though.
Honestly, I think well, to answer Molly directly, so the product currently does exist, and we are currently in, I want to say, like an MVP stage here locally
Amazing.
within Trinidad and Tobago, and because we've kind of built out the payment integration. So I think Jeffrey would have asked, or I think someone would have mentioned earlier, like, what you didn't really clearly hear me state, what problem are we solving, right? And one of the things that we're trying to solve is that seamless integration in local markets. So we have, in our opinion, done a really good job of making sure that from buyer to seller, we have like a seamless payment integration in such a way where it protects both both buyer and seller within that regard, and we can essentially escrow payments through that storefront to allow that safe transaction from end to end between our buyer and consumer. And that's something that does not exist currently right now within our markets. There are adjacent there are many adjacent I'd say services that kind of offer piece together. But I want to say like the best way of putting it is just kind of like look at I and it kind of started off looking at just how much we use Amazon and eBay, and trying to be able to see like, okay, when we look at our solution, how does that adapt to a regional context? And the answer was that we just couldn't find anything that did it in that sense, and that's where the idea kind of started.
Okay. Panel, any closing thoughts before I move on to the next question? Tevin, thanks for that additional context. All right, great. Jean, feel free to unmute.
Hi, my name is Jean Rosario. I am validating the idea of constructing a solution for the free market in the Dominican Republic, and I have two questions. My first question will be, I have identified first step from validating the project to the creation of a market fry here in the Dominican Republic to connect businesses, drivers, insurance, and banks. So the main idea will be that the truck drivers will have work history that we could potentially show to the insurance companies as a way to give them or sell them premium policies with a lower price based on their reviews and the history of their driving experience, right? And also to the bank, because right now, as a subcontractor driver on the Dominican Republic, you don't have any former work of history that you could get into a bank to, for example, take a loan. So you will have to go into um a third party with interest and risk is much higher than just say the former process that a normal employee, for example, will have, or a company could have access to. So taking this stage that I am, I was thinking on asking for money to use that to validate my idea and connect with companies and drivers. But from what I have heard and what I investigate is that that may not seem as a good as the best way to approach it, because on a pre-seed round, which is the phase that I am right now, that could dilute the shares, and also potentially give a wrong message to a potential investor on phase three, where I am looking for more investment for constructing the marketplace here. So as you were mentioning before, if you see me trying to pitch this idea to you, what would you think would be the best way or the best route? Should I try to build it myself and then wait for a better phase where I have better answer of the market and something that actually the market is using? Or do you think this first approach is a good thing to pitch, and wait for an investor willing to jump in the boat?
I have a couple thoughts. Is that okay, Rob?
Yeah,
I jump in
please.
really quick? Okay.
Yeah.
So first of all, who is your customer?
My customer will be the company that is willing that needs that loads to be moved.
The truck company is
the
paying you to vet their workers so that they can get lower insurance and better loans at the bank. Am
No,
I
sorry.
understanding that?
Well, okay, so yeah, my main client will be the truck drivers, right?
The truck driver. Okay.
But I wanted to start first with a solution for the distributor companies. So let's say I will have the egg, and now I can use that as a bait to attract the truck drivers with work that they could
Okay.
do.
So let me say this. I think before you even think about asking for money from anybody, you need to understand what really be able, and you probably understand this, so that's not the right way for me to say it. Be able to articulate what the problem is and how you're solving it really crisply and really cleanly. An investor is not going to give you money to find product market fit. You already have to have your product market fit for them to buy into what you have. And finding product market fit can be done for free. You can get people on the phone, you can start calling them. Is this a problem that they're really facing? And is it a problem enough that you can be a painkiller, or you're just a vitamin? That's not my line, that's somebody else's, and it's fantastic. Are you something that they really need, or is it something that would be nice to have? And if it's not something they really need, then it's going to be tough, I think, to break into that market. That's just my initial thoughts.
Thanks,
Thank you.
Mollie. Emmanuel, anything to add?
Yeah, well, I do believe that I think it was Ugo or Jeffrey that said it earlier. If don't think you have the pull to raise without, having reasonable amount of revenue ongoing already, then you should bring, someone that could add to the image of the company, right? Someone with deep domain experience, has built in that industry before. It could be a really convincing addition to an angel investor that might be interested in putting in some money. So yeah.
Thanks for that additional perspective, Emmanuel. Yeah, Ugo, go ahead.
No, I think there was something that Mollie said that I liked earlier, and it was a challenge. In fact, I think I've asked him to make sure I get Mollie's number after this. She said she wanted to challenge someone to do as much as they can without money, right? Create as much value as you can, because you've got to sell value to investors. You can be a nice guy, you could be but before you approach an investor, have something already that you feel you would pay for, or that you know what I mean. That's the only thing I can say. So as much as you can do as much as you possibly can do with your own money, with your own sort of whatever you have, so that by the time you get to an investor, they know that this person has sold their shoes and shirts and put everything in, and they really have reached a point where they need an investor and they are creating something of value.
Thanks, Hugo. Jeff, any final thoughts? If not, we'll move on to the next.
Not really. It's very, very similar to what Hugo was saying. It's just, yeah, you know, if I'm sitting across the table from someone and they're saying, look, I need money to get started, my first question is, well, why haven't you started yourself? You know, we need to see impetus. So I think investors need to see impetus.
Thanks, Jeff. Jean, thanks for the question. Hope that answered your question. All right, Mark, feel free to unmute.
Hey everyone, so my name is Mark Allen. I am from Trinidad and Tobago, and I am building Aurum Technology Limited. So Aurum Technology Limited is a AI native service company. So instead of just selling traditional SaaS tools, we handle all of the work and just sell the outcome. So the main product I'm working on right now is actually something called Aurum Life. And the problem that Aurum Life is trying to solve is that most people manage their lives across many disconnected apps. So they have tasks in one app, notes in another, and their goals nowhere. Often it's in their head. So we tend to see, and I'm sure we've all used to-do apps before. So we tend to see, we set these goals and we might follow them for a week, but we immediately fall off. And that is because we have this sort of disconnect with our goals and how we track them in the digital world. So that is essentially the problem that Aurum Life is trying to solve. So the closest tools, because I did a bit of market research, and I've tried all these myself, and that's why I decided to come up with Aurum Life. The closest tools today are Notion and Obsidian. They're powerful, but they're blank canvases. Design your own system, and you have to maintain it by hand, which is quite tedious. So for almost everyone, the upkeep becomes a second job, and as such, the system tends to decay and drift back to scattered lists. So Aurum Life is different in two main ways. First, it comes with structure out of the box. The life is organized into pillars, the projects beneath them, and down to today's tasks. So every action you complete on a day-to-day basis links back up to your major goals in life. Secondly, there is an AI assistant that does the maintenance. So every single day you get a morning brief, a weekly review, and a heads up on the projects that are stalling or the areas that you're neglecting before they slip. Notion and Obsidian hand you a powerful empty room, whereas Aurum Life furnishes it and keeps it current for you. So it's private, it runs across all devices, and that is the main differentiator, I guess, against current AI tools. So everything's on the cloud, all of your private data, nobody's trying to really hand that over. So Aurum Life tries to solve that by letting the user have that privacy, and that is something that matters a lot in I guess the times we're living in right now. So I guess my current problem is that I have an MVP, but I'm not quite sure where to go from here. I don't have a legal budget. I don't have a marketing budget. And the main customers I'm trying to sell to are other founders, CEOs, and I guess parents, busy parents. So anybody with a busy schedule, I'm trying to pitch to them. And I guess I'm not too sure where to go from here. Aurum Life is built in the Caribbean, but I believe my main customers won't reside in the Caribbean. I guess the price point for an AI product like this is around 25 to 40 US based on the research I've done. And I just don't think the average Caribbean also will be able to afford a tool like that. So I guess I'd like to know what should I be trying to do to raise foreign investment, or should I just focus on the Caribbean?
I can address the marketing budget. You don't have to have a marketing budget to do marketing. I've done marketing for many, many years, 20 years in defense tech, helping people go to market. And I helped a company called Presidio, you should check them out here in the States, launch their digital vault product, which sounds very similar, but obviously not. But you keep all of your documents in a safe place. They're targeting the same type of people, busy moms, busy parents, people doing the things. They launched with zero marketing dollars. They're reaching out to founders on LinkedIn. They're posting. So you are your brand. You need to be making videos. You need to be posting about it. You need to believe in what you're talking about and be out there as much as possible. You need to be on TikTok because that's where all the working moms are. That's where I am. I have 3 little boys under the age of 7. Like, my life's crazy. So how do I'm your target demographic. So you need to be posting videos, and that's free. That's just your time. Literally recording it, cutting a bunch of shorts, get stock footage, put it out there. The next thing I would say is you need to reach out to influencers. Who is already out there talking about busyness, not having enough time, to-do lists, all the different things that you're talking about? reach out to them. Can we partner? Can you try my product? Can you test this out? And then get them to post it. Now, oftentimes they're going to want something. So if there's like a percentage of sales or something like that, you can give them, that's what you can offer to start. But then eventually you can build out a whole affiliate program. So marketing does not have to cost you dollars. And as soon as you do get dollars, you can start putting that back into your marketing budget, but you'll already know what's converting, what gets impressions, what gets people to buy, so that it's almost like a science. It's not just, I think we're going to put this in the marketing budget. It's like, this channel works. I'm going to put money behind it, and I know I get conversions. So that's just that's the part I can speak to. I can't speak to the investment piece.
Thank you very much, Molly. I appreciate it.
Jeff?
Yeah. So when you're talking, the first thing I was trying to understand is who's your target customer, but that's clear to me now. So this is a B2C play. I think, yeah, you've got to make sure you understand um who that ideal customer is. And if one of the things I was thinking about was, does it even need to be B2C? Is there a partnership channel that you can use where you can go into it's almost like an employee benefit. You can go into large organizations and say, hey, here's this tool that you can use for employees. This I must admit, I'm not quite sure how employee benefits land in the Caribbean. It's quite a big thing here in the UK to make sure that large employers can offer all of these additional benefits, and there's a lot of marketplaces actually where you can actually build these products and sell this so that the employer pays for um the employees to actually use these apps and benefit from it. So that's something you could be looking at. And if this thing is scalable and is scaling beyond the region, then absolutely that's a channel. But yeah, I agree. You have to try and understand if it sells, what aspect of this is selling and who's it selling to, which is kind of Molly's point. You don't need a big budget. You can just go and kind of guerrilla this thing, and figure out what channels work, and then you pull. Once you know what's working, you go to invest and say, hey guys, I've kind of figured out how to attract customers. Here's my acquisition costs, and then you throw kerosene on that thing and watch it blow up.
Definitely. Jeffrey, I just have one quick follow-up question. I
Sure.
would have actually thought about exploring the B2B aspect of this product because it's something that could be used in companies as well, and it gives visibility to the CEO in terms of what each department is up to, which projects they're stalled on. And I definitely see that there could be a market for the B2B aspect. So I'm wondering, what do you think I should lean into in the because right now I'm in the pre-seed stage. So should I focus on B2B or B2C in terms of scaling at this stage?
One of the things you'd have to look out for when you're trying to approach a B2B as an almost like an enterprise deal is the ability to integrate into the existing systems.
Right.
What those companies don't want to do is have 100 different logins and 100 different platforms that they have to kind of access in order to kind of get value from it. So
Right.
just be aware of that first. But it feels that this is more of a consumer play, and one of the things you might want to do actually is use the consumer approach to validate what this is doing before you kind of go into B2Bs. B2B is a much longer sales cycle. It's a much longer conversation. You can test and iterate this thing on a consumer level so much more quickly than you would be
Okay.
able to do on a B2B level, I think.
Okay, thank you very much. In terms of the integration problem you raised, that is definitely something I thought about. So I've kind of already built integrations with the common tools that enterprise already use, Microsoft 365, Jira, Confluence. So that is definitely like one of the main selling factors for Life. It integrates into the tools that you already use and it removes the fragmentation that exists. So I will definitely look at the B2C aspect and I will try to get my marketing up as you guys recommended. Thank you very much.
Thank you, Mark. Emmanuel,
Mm.
Ugo, anything to add to that conversation before we move on?
No, I'm good. I think it was really well covered.
Okay,
I
Emmanuel?
think what I will add is, well, this should have been handled in the model session, but there's no right answer to these things, right? You just have to be out there to get your ICP, to get your ideal customer profile. You just have to be out there. You can iterate a lot of times. Just get out there and get it done.
I like that.
Thank
Discover
you,
it by
Paul.
doing. All right, Mark, thanks a lot for the
Okay.
question. Alex, good to see you again. Feel free to unmute, bud.
Happy to be here, feeling the energy in the room once again. So I don't want to
Always.
I don't want to be seen to be usurping any one of the esteemed panelists, but I would encourage my friend who went before me to check out the agentic features in ClickUp when trying to um, diversify and differentiate your product, as that's sort of the market leader in that B2C, B2B space, right in that niche you're looking at. And in relation to integration, also consider from the compliance side that SOC 2 is a compliance standard that you're definitely going to need to be able to get in on the B2B level. Okay, enough usurping. My name is Alex. For those who don't know me, my co-founder is Kevin. He's not on tonight, but together we're building Venturable. And that is basically a system for us to scale our investor relationships, both on the debt and equity side, for what we call issuers, which would be a bucket of companies seeking to raise funds through either debt or equity means. So our platform is soft launching at the end of next month. And our system is basically we will have issuers able to slot deals in. Investors will then be able to express non-binding expressions of interest. And when we collate enough, we close the deal, we organize the paperwork, and we assist with the transaction finalizing. So that is basically our whole cycle. And also we serve on the market intelligence piece as well. And we put out content on the Caribbean on almost a weekly basis. So that is a nutshell what we are building. In relation to my question, we've spoken a lot about the fun side of a startup, but in relation to the not so fun piece, is there a best practice for housing your investment that's not gonna blow back on you by the time you reach your Series B? So just to expand on that very briefly, you could consider things like offshore companies, holdings companies, found Cayman foundations, SPVs. So is there a best in slot mechanism to house investment?
That's a really good question.
What do you mean by blowback on you?
So when you're trying to raise a Series B, you don't want to be looking back the compliance chain and, for example, have a Cayman foundation that is going to be frowned upon for an institutional VC. So I'm just asking, is that perception something to be concerned about?
I think it's always good to look at understand the exit or understand the future rounds and make sure that you're building for it. But that generally is a more of a general governance kind of compliance approach that you take. You get your board set up properly and you get all your minutes and your filings documented properly. It depends on, I think it depends. It depends on where you want to go in terms of what investors you want to, again, is a milestone thing, isn't it? What investors you want to be engaging with, in your future rounds, and work that backwards, trying to just understand what their appetite is. I don't think there's any one answer for it. It really depends on your path that you want to take, I think.
And just to make it a little bit more pointed, sorry to cut you off. Is a housing your investment in offshore companies generally frowned upon or generally seen as a smart mechanism?
The answer is the same. It depends.
Okay.
Let me just qualify that. The Caribbean Ventures, which is the fund that we've set up, our fund is going to be established. It is domiciled actually in Delaware. The first investment we're making is probably going to be incorporated in Cayman. But that's because of the LPs that we are attracting, and they have particular needs or particular concerns around the FX and getting their money in and out of the region. Even though these are what's the word? Uh, diaspora. Even though these are
Okay, that's
diaspora,
fine.
yeah. Um, but that's specific to us and our strategy in terms of we're looking for Caribbean-based people who probably aren't in the Caribbean who understand VC and want to support and back a whole system in which we bring more capital to the region in a structured way. But first, recognizing that actually there's a few hurdles, or there's a few kind of steps you have to take before we actually get there eventually. So that, that's our approach, and that's why we structured it that way. But I guess, unfortunately, the answer is it depends.
Well, that's
I
great to
wanted
hear.
to add,
Sorry,
I wanted
continue.
to add to that thought that it is a good idea to think about where you domicile. For instance, if you're a Caribbean company and you're domiciled in Delaware, we can't invest because we have to invest in Caribbean entities. So but as a fund, we're domiciled in Ontario and we're domiciled in Barbados and we're domiciled, and we're headquartered in Jamaica. So if anybody wanted an investment from us, they would have to be domiciled. One of their domiciles would have to be in the Caribbean. So they would have to. I can't invest in Joe Company in Delaware, as an example, because even though it's Caribbean people that are in the company, you have to be headquartered according to our limited partnership agreement, LPA. The companies we can invest in are in the region. So I always encourage people, if you're Caribbean, there are lots of Caribbean domiciles that are good. And you could still have a Delaware entity. Maybe the Caribbean company is a holding company or the Delaware company is a holding company. Then it becomes up to the lawyers to work out how. But if you're in a jurisdiction that LPs can't invest in, then you lose out on that money, for example. So it is a good thing to think about. Now, Jeffrey, your fund can invest in a Caribbean company, your Caribbean fund, in a Caribbean company domiciled in Delaware, right?
In theory, it can, yeah. Yeah, we can, yeah.
Okay.
And
actually,
Alex is an attorney too, so he's probably well aware of all these things, So it's an interesting conversation, Alex,
we probably want to structure it. We probably want to we want to structure it so that we can actually, because look, this is about supporting the Caribbean companies, and for me, that aspect of it is just kind of mechanics to make it work. At the end of the day, we want to get cash into the Caribbean to support Caribbean founders and to expand this ecosystem. So, yeah.
Well, fantastic, fantastic. Thank you all for your feedback. And just for clarification, it's investors with that tie to the Caribbean diaspora, who are really targeting to pull onto the platform. And it's the deals native to the Caribbean that we want to have on there as well. So
Okay.
it sounds like a good conversation to
Sounds
have.
like we should have a conversation, yeah.
Definitely.
So thank you, Alex. Before we move on to
Thank you.
the next question, Emmanuel or Mollie, anything to add to that conversation? All right. All right, Tishana, good to not see you because your camera is off, but feel free to unmute.
Hi, Ro. Hi,
Hi,
everyone.
Tishana.
Hi, good afternoon. Good evening, everyone. My name is Tishana Simon. I'm the co-founder of Research Navigator. Research Navigator is an AI-backed GPS for market validation. Businesses, small and big, usually want to launch without proof that their idea will work or can work. And with the development of AI, everyone is scraping the internet without actually understanding what is on the ground. So Research Navigator saves costs, gives true original methodology, not abandoning AI, while also allowing persons to launch even faster. So I have two questions for the panel today. My first question is, I feel like we're in a kind of a loop because we have our demo. And I've been talking to investors and getting their feedback. And one of the feedback that I got was that it's a good idea, Research Navigator, that is, but we need to, before we get any sort of funding, we need to build it out, even more than we've already built it out. And we need to prove the metrics. We need to prove the CAC, the LTV, and all of these different things, even though we have estimates in our pitch deck, to prove that those numbers are real. Now, the challenge is, because of where me and my other two co-founders, I'm a research analyst by trade, I own a business called Data Miners Business Research, and my other two co-founders are chief technical officers. They are doing the actual coding and building it out. I'm making templates. We don't have time to do what that investor recommended, because he said whatever we're doing, we have to do it fast. But we don't have time because we don't have the money and we're doing this on our own time. So we're trying to get pre-seed funding. A lot of the things we've been talking about today, I've been doing myself: marketing, sales, talking to people, validating. But we need to move faster to get into the market, to even try to get the beta testing. How do you come out of that loop? Because without money, I can't market in the sufficient way, other than the emails that I have and the people that I have that I'm reaching out to get 100 beta testers. And yet they say, well, you need to have beta testers to do metrics, but we don't have time to build it out fast enough to go into the metrics. So that's my first challenge. I don't know if you want to answer that question first before I go into the second question.
I'll let Mollie take that first.
I just want to answer the first one. First of all, is
Yeah.
this just one person that gave you that feedback? One investor?
Yes, one investor.
Then I would say, no, don't even, first of all, you took it to heart, which is great. You need to listen to everybody and all the things. But sometimes people are just wrong, or they just need to come up with a reason why they can't invest in your company. And that's the most polite way to say it, is like, oh, there's not enough traction, or oh, you need XYZ thing, right? That doesn't necessarily mean you need to go do those things. It's kind of like someone saying, oh, I don't like your haircut. It's like, oh, I don't really care.
Right.
So it's just kind of, it is what it is.
Right.
So put that to the side.
Yes.
You have a lot of conviction. Are the people you're talking to your actual customers validating what you're building?
Yes, we did a whole validation exercise.
Yeah. That's what matters.
About 30-something questionnaires, 12 interviews with experts. The main feedback is persons need it, but they don't know they need it. So we also, in our marketing, would have to educate, but there is a need. And as well, as a researcher, I also did an international validation, because the aim is to go international. So I did a Reddit scrape, and people talk about how they come up with all these lovely ideas and nothing ever comes out of it because they never validate their market.
Okay, let me say it like this. So you're doing everything right. What I would say is, it's not about it's a tough hill to climb if you also have to educate. That's so education plus selling it makes it a really tough. That's a tough road. What I would say is, and the marketing, again, I'll go back to, it does not have to cost money, but it does cost you time. You need to be out there talking about it as much as possible. I would also say, put yourself in as many rooms as you possibly can where this problem is being talked around. Maybe they don't realize that you're the solution, but the problem is being talked about, because then you can offer yourself up as the solution to that problem. And I would say you're going to meet people. So in this room, there's investors right now that you're pitching what you have, and they're hearing you and they're connecting with you. Put yourself in as many of these rooms as possible from a marketing perspective. This goes for all the founders, because at the end of the day, AI, yay. People are what matter, and networking is what's going to actually land you funding, because you have to impress the person on the other end of the check. And so if you can do that, start putting yourself in events, start putting yourself in different rooms. And the VCs, if you're in an in-person event, they're usually in the back because they're scouting for deals. They're not actually up front. They're in the back mingling. That's my experience. And strike up a conversation. Be back there, and always bring a bottle of wine to the party, right? Don't just have an ask right out of the gate. Like, hey, let's talk and kind of build some rapport. And you're going to find people that can help you network and build those relationships and introduce you to other people. It's the network effects that are free from those types of things. So that's what I would say off the top. But don't give that other investor another thought. Seriously, it's already clouding too much of your mind space.
Thank you. Thank you. Because I'm worried about, I was worried. At least I'm coachable. I will say that, because I thought about it. Anybody else want to respond before I go on to the second question?
I think that's well covered.
I would just agree that don't listen to any. First, get used to rejection. And don't. In fact, the first person that tells you no should give you even more determination to find the yeses,
Yes, sir. Yes,
and
yes.
prove them wrong.
Yes, thank you so much. Okay, great. So, well, I will be contacting you, Hugo, because you're in your area. I already have your LinkedIn up.
Okay.
So I just wanted to have a
Okay.
discussion. I'm not going to
Sure.
pitch to you. Not
No,
yet anyway. I
not
can
yet,
pitch too.
right? Yeah, you can. You can.
So
I'll be happy to talk.
yes, thank you so much. My second question is this. I've been getting some information from investor and some platforms. And I guess this goes back to what Molly is saying. Don't listen to everything every investor is saying. But one of my observations in some of the platforms is that due diligence in terms of what is required in terms of finding out person's background is a bit unbalanced. So I like to crack the joke that what I'm hearing is that for founders, if they want to find out what is in your kitchen cupboard, you have to open it for them, for the investors. But for us, all we could do is a Google search. So given you guys' experience and gals, what is the more, because I cannot believe that it just can't be a Google search. What kind of due diligence are founders allowed to do in the space in terms of finding out if this investor matches your values, matches your vision, matches how you work with people, collaborative versus, I mean, you guys talk about that before as well. In terms of people don't want a partner, people, how far can you go as a founder in terms of your own due diligence into investors? Thank you.
Okay.
Yeah,
Good.
feel free.
Good question. Good question.
I think Hugo
Mhm.
said it earlier, right? You said it, didn't you? You have bad investors, you have good investors. I think founders aren't brave enough to ask that question. And if you think about the flip side of this, right? If VCs are looking for the best deals, when the best deal comes, VCs will be squabbling over it. So that situation will inverse itself when you have multiple VCs coming after you, then you can ask them what's their inside leg measurement, and they will tell you, right? So it works both ways. It probably feels to you like right now that it is a one-way street. Um, but I think but there's some truth in what you're saying. Fundamentally, founders either don't know or don't feel like they have enough courage to ask those questions. No one asks me what returns I'm looking for, and that's a question that they should openly ask. I think all founders should be asking VCs, what do you want to get out of this? Why are you talking to me? And that's something that I think you should be doing, because like I said earlier, um, I don't like the expression that you're giving away shares. You're not giving away shares. You are selling a piece of your business for its future growth. You are the one selling. You're the one in control. You're the one who's got something to sell and they're trying to buy it. Um, I don't think people really look at it that way, but that's the way you should look at it. So that's kind of my feedback to you on that.
I was going to piggyback off of you to say also that um, you you can find out the deals that investors have done and call the founders, the investees, and say, hey, what's it like dealing with that investor? You know what I mean? For instance, we invested in a small delivery company in Jamaica called Doorstep. Tough business, and I'm saying, but you can go to the founder and say, hey, I know you guys did something with them. What is it like? So you can get a sense of how they're treated and all of that. But you can, within 10, 20 seconds of talking to an investor too, you could get quite a sense. And then you can also find out if you have access to the investors have invested in them. So you should do your homework on if you can on investors. But you're really trying to sell to them. So the focus is on securing their funding. But it's also good to partner with somebody that you enjoy working with. And I've heard some horror stories in Jamaica as well of investors in investees So, yeah.
Thank you
Awesome.
so much, guys.
Thank you, Tashana. Before we move to Mark, Terrell, I believe you dropped a question in the chat, so if you just want to unmute and ask it. And then Mark is going to be the last question for the evening. We're like 12 minutes before the top of the hour. So Mark will be the last. Terrell?
Yeah, absolutely. I'll be very quick. So as you know, CarePay is a payment platform looking to service the Caribbean. I'm really passionate about financial inclusion in the Caribbean. And I've had several discovery meetings with a particular vendor, a global payments provider. And they expressed interest in exploring a joint venture rather than remaining a technology vendor with CarePay. As a founder preparing to raise capital, how would you navigate that interest? Should I continue exploring the joint venture or keep the relationship focused on commercial collaboration until CarePay gains traction?
Emmanuel, would you like to go first?
Well, I think the first thing I did pick up was they showed the interest.
Yeah.
And are they the only payment providers in the region? Did you have the, thought process of having a joint venture? So why are you considering it? Are they the only payment providers in the region? Or are you just considering it because they offered?
I'm considering it because it seems very exciting. It could really catapult CarePay in a completely different way than I ever thought of. They would like to add their banking as a service on top of the CarePay layer. So my customers would be their customers as a banking customer. So I was thinking simply CarePay wallet. They're like, no, let's layer a banking as a service on top of your customers. Let's grow this big and grand. Sounds great, but should I wait for CarePay to have more traction first before even considering that?
Yeah, well, I'm trying to see the value add for them, right? It just doesn't align for me. If I'm to, handle that personally, because I've worked with a few payment providers in Africa and, integration of payment providers and all that. There needs to be some sort of like value add, right? They probably like do what CarePay is doing. So why are they interested in the collaboration? The key reason for the partnership is really important because they could just swallow you and you move into irrelevance, right?
Yes.
So
And their thing that they're currently in Latin America, but they're not in the Caribbean. So this is a gateway, I believe, for them to get actually into the Caribbean using the CarePay wallet and then adding banking as a service on top of that.
The only thing I would say, and it might not necessarily even be related to your tech, but I would just say a bird in the hand is better than two in the bush. So if you have an opportunity to generate revenue or have a partnership and expand and have distribution, and it's right there in front of you and someone's excited, I would say you should go for it versus waiting for some maybe hypothetical investor that's in the woodwork. Now, if you have an investor who's at the table, like maybe that's a different conversation. But if it's just I have to find someone, I mean, if you can find someone, right? That's always how I frame it. So just something to think about.
Okay, thank you.
Jeff, Ugo, anything to
add? It is a tough question. Banks and fintechs, it's like the fox and the chicken partnering, right? But I like Molly said, they're in Latin America and you're in the Caribbean. So you could structure something where, because first of all, it's very hard to get, there's so many fintechs out there right now. It's very hard to get funding. And it's very hard to form partnerships. Banks actually don't want to partner with fintechs because they feel like the fintechs are cannibalizing their
space.
Wildly massive fees that they charge everybody. But I do know that I do know a fintech that has partnered with a bank. Does it preclude you from partnering with other banks, for example, once you partner with them?
It would.
Well, that's a decision point right there, right? Because that's the other thing. Banks don't want to, give you money and then you partner with their competitor.
And they don't want to share.
They're
They don't want to
really
share, right?
horrible about that. So you got to look at the trajectory of the business and do the math. Like, what percentage of your business are they going to take? If you do your discounted cash flow, where were you planning to get to? But now they're gonna take 40% of your business, or they're gonna eventually just try to boot you out and take your technology. You've got to think through those things.
Think
So
that
we
through.
can't probably answer that question for you. But as Whoopi Goldberg said, you're in danger, girl.
Ugo, I'm
Tread
going to be
carefully.
quoting you on
You're a
that tomorrow.
comedian.
All right, Jeff, anything to add before we move on to the last question of the evening? All right. Thank you, Terrell. Mark,
you.
feel free to unmute. And this is the last question for the evening, folks.
Okay. Hey again, everyone. So, as I stated earlier, Aurum Technology Limited is a AI native platform, and Aurum Life is not the only platform that I'm building. I also have a AI native compliance platform that is built to help financial services with emerging AI compliance. So the EU AI Act came out in 2024 and it's going to start being enforceable by August 2nd. And with the current state of the world, all of these organizations are focused with adopting AI, not so much on governing it. So a lot of these organizations in the next 5 to 10 years will have a lot of problems when it comes to compliance, because there'll be a lot of shadow IT, there'll be a lot of technology, but not so much controls around it. So Aurum Compliance is a solution where we have AI essentially preparing all of the documents for you, and they just get a audit-ready compliance deliverable. My problem with this is, just like Tashana, I also am a full-time student, and I am a full-time employee as well in AI in the financial services. And I'd just like to know, how would I go about as a solo founder from the Caribbean, pitching to organizations, possibly in the EU, and I guess getting attention? How would I go about getting those kind of partnerships as a full-time student and employee? I guess I just kind of don't know where to start.
I'm actually gonna ask Nikkei if she would like to have this question. I'm putting her on the spot, so feel free to say no, Nikkei.
No worries at all. As a background info, why Raul is passing this on to me. I'm an attorney, and I'm licensed to practice in Germany and Europe, and I have a background in copyright, but I also deal with a lot of AI regulation, AI governance, and of course the implementation of the AI Act is something I'm also looking into. So just that as a background. The question I would have for you is, who's your target audience for that? Who are your target customers? Is it small businesses? Is it enterprise level? Is it who is it really? So get clarity about yeah
I'm
about
primarily looking at, sorry to interrupt you. I'm primarily looking at
no worries.
offshore funds, in Cayman, BVI, Bahamas, but it could kind of apply to anybody that has EU AI governance exposure. So it could range
Yes.
small businesses all the way up to enterprise. Yeah. There's a large market. And with fines going all the way up to 35 million pounds, I feel like we're definitely,
Yes.
the demand is going to be huge for it. Yeah.
Definitely. What I can say, like in general, it's always good to reach out to trade associations, for example. They have the contacts into the industry. And let me think if I can think of any director paths, but maybe we can also connect offline. And when I
Sure.
had a bit more time to think about how there could be a way forward for you. Yeah.
Sure.
So
Jeff,
so
since you're in the UK, any additional
yeah.
perspective there?
Any thoughts?
Not a lot. Not a lot really. I think we're also looking at it here as well and trying to understand which direction it's going to go.
Right.
It's still to be. I think it's still to be determined. But yeah. No, I'm struggling to add much, unfortunately.
Tough question there, Mark, but
Yeah.
but
No,
maybe we
let's
can.
connect.
Good
Let's
question.
connect
Good question.
afterwards. Yeah, it's a very good question, and it's definitely need for it. I'm seeing this.
Mm.
We had an event about it. AI governance is a big topic.
Yeah.
Um,
And I mean, I don't want to preclude the other panelists. So, Mollie, Emmanuel, Ugo, if you have insights in
No,
that
that
arena.
definitely is I'm a bit out of my depth with that question.
Okay.
It's quite a good one.
Yeah.
All right. So
But you're
we
clearly
ended.
a very
Sorry,
hardworking.
go ahead, Ugo.
No, I was going to say he's clearly a very hardworking guy. He's got 2 transactions. He's working full time, and you're in school as well.
Yeah, I'm a full-time student currently.
Quite driven, eh? Well done.
Very much.
That's what we like to see. That's what we like to see. All right. So with 1 minute to go, I would like to thank my team, Nikkei and Adana. I'd like to thank all the panelists who are still here with us, Mollie, Jeff, Emmanuel, Ugo. Christine, unfortunately, she's in Egypt and she had power outages, so she had to drop off. And then our other panelists, Laura, she's in Dubai and she fell ill, so she couldn't be here with us tonight. Really happy that we had some, not just really difficult, hard questions being answered, but a lot of off session conversations are going to be taking place, and that is the exciting part, because that's the whole purpose of having these types of events, right? To facilitate these connections. So thank you all again. Adana would have shared in the chat that we are launching a free starter bootcamp next month. It's free to the founders. So if you haven't already applied, please do so. The deadline has been pushed back to July 13th. And if there are mentors still on the call tonight, we also encourage you to sign up. The ecosystem needs you. So with that, I bid you all good night. Enjoy the rest of your week and weekend ahead. Thank you all.
Thank you.
Have a wonderful night.
Thank you.
Thank you.
Good night, everyone.
Good one, everyone.
Bye. Good
Bye.
Bye.